Hey there, everyone. Welcome to this week's edition of Bulls versus Bears. It's EP128. My series of extraordinarily clever dad joke titles is continuing. Is it time to abandon ship? Subtitle here, of course, is, or is it time to buy the chip? Anyway, sorry about that. I've still got heaps. Anyone who listens to the morning call will find that out. Finn's back from swimming with the whales.
Hello, everyone. How are we going?
And he wasn't gambling in the casino. He was just he was legitimately swimming with the whales. We'll get to that later on. Kai Chen, as per usual.
Hello.
He's back fresh off his, his outstanding appearance on AusBiz this week in the technology space. I highly suspect I'll be relegated back to Reeds and Domino Pizza Land on the ASX version of the call moving forward. Now, before we move on, Finn, you legit swam with whales. Like, you've got to at least.
Yep, I went to Tonga. It's much warmer. The water's beautiful. The water's clear. And yeah, I went swimming with whales. They're actually pretty exceptionally friendly and keen to hang out.
Right.
So yeah, went on a boat, went out there, saw a couple of whales, managed to tee up a couple of interactions, and yeah, it's beautiful. They're massive.
Yeah, cool.
They're huge.
Just for scale, like, is it like an office block literally swimming past you, or like what? Or is it just so hard to describe?
It's so hard to kind of actually pinpoint how big they are, because it kind of feels like it's not real when it's happening. But right. the big ones. There was a big pregnant mother, and I mean, to put scale onto it is probably about like 3 times the size of our boat, and we had a pretty sizable boat. And then it had a little baby on its back or swimming around it, which was very small, about 2 days old, and that was still probably about the size of our office, which probably A, says a lot about the size of our office, and B, it's still really big.
You know why that is? It's because we're plowing all our profit margins into servicing our clients. Anyway,
right.
If anyone's listening from over in Tonga, from the Tourism Authority, we're expecting a check in the mail. But anyway, Kai, again, the bear. Well, I mean, it was only by 0.5%, and we were in trouble up until last night.
Yeah.
And the reason that these are still showing fairly strong buys is because it pretty much just got hosed last night. The Nikkei is in today's session is down a further 5, well, it was 5.5% at one stage. And we do have indice futures, which is a bit of a cheat for us leading into the next week, because we haven't had this kind of move in the indice futures for a while. I think we're down, bear with me, down 1.6% in the Nasdaq again on top of that. So in more trouble than Skippy in a bushfire. Everything else is fairly flat. I mean, we were basically flat. So and I mean, we're down 0.8% today, and healthcare is the only sort of shining light, and a few of the absolute beaten down favourites have recovered. But in the bottom left hand corner there, chipwrecked. Oh, there's another one. All the chip stocks getting hammered. Oracle as well. It is just grim, and it's been extraordinarily volatile. And then like Caterpillar, AMAT, and Lamb Research, which are the dark reds there next to Tesla in the middle. We're down because they're data center related kind of thing. So IBM was down 37% after its earnings. I don't even know where that is, but just look for the darkest red dot. It got flogged, and that was really surprising to the market. And look, Micron down 16. I mean, could recover that like Tuesday. Who knows? They've been up and down at least 2% to 3% every single night. That SOX index. Surprising up the top here is Johnson & Johnson and Eli Lilly up in the top right corner. Because healthcare's done generally pretty well. United Health had good earnings and went up 5% or so, but ended up flat for the week. And that's really it. We've got a couple here that we're super. Well, we'll just quickly get on the ASX. It's kind of erased those already. All of that, basically, anything that's green there, essentially pretty much have drifted off today. And there wasn't too much news outside. No, I mean, there wasn't really huge. There was bits and pieces of corporate news, but it wasn't massive. Rio had a good earnings. Copper did very well. BHP is dealing with the strike. And I think their iron ore business went well, and everyone's like super married to the idea that BHP's a copper company now. So they were kind of disappointed that iron ore did well. That kind of wraps it up from in terms of those. But TSMC, and we will get to Netflix next, which Kai, for stock of the day, predicted beautifully that it would vomit, and vomit it did. But TSMC did not. TSMC smashed it out of the park. 77% increase in and I've managed to accidentally throw my notes out. Increase on the previous year, and everyone was happy with everything. I mean, they beat by more than 10% on that EPS, and yeah, it was just so outstanding. And basically, they announced their CapEx number went from 62 from 54, and straight down 2%. 2.5%. So on the day, I mean, this I agree with their, with their CEO or their head. Like, it's a multi-year megatrend. This company's going to be, but I think that's probably more of a reflection of, how overheated the trade is. I think at the moment, and how sensitive they are to CapEx. Kai, obviously, you were talking, memory chip glue, and all sorts of things on the call the other day, which just I'm a
little bit disappointed that I didn't get enough. Like, actually, both me and Mark Morland were a little bit disappointed we didn't get more time to talk about it, because there's just so much below the surface to talk about. Like TSM, I guess obviously we can talk about the stock price, but it's also really interesting the story behind them, what's going on there. And, I was listening to a podcast with Jensen. Jensen is such a fan of TSM. He could be biased because he is from Taiwan, or ethnically Taiwanese. So he's
I think it'd have a hell of a lot more to do with the fact that he gets his chips first, but and 100% of his chips are made in that factory. He's hardly going to shit can them, is he? Like, he's going to be like, exactly. They're disgraceful.
Exactly, but he did mention, in terms of just the customer service and end-to-end package that TSM does, they're just beyond any other foundry, right? So it's all it's the whole package. It's not just the chips. But the service behind it, the deliverability, it's just flawless. So yeah, that's why they're leading pack, right? And but also actually, very interesting point about TSM. Taiwan's obviously got a very large semiconductor industry, and that's really what they're built on, and that's probably their most profitable segment in the economy. But they've got a lot of the talent is concentrated there, right? So you have a lot of university students who come out, and all the talent goes to TSMC. So there's a lot of grassroots there as well, which contribute to the success of the company. So it's a fantastic company. But this is obviously very different to what we're looking at in terms of price. But the story behind it is quite interesting.
Oh, I was just blown away that it was down. I looked at the numbers and just went, because I was just reading the earnings, and I'm like, that was almost a better beat than and just so solid. And then I clicked on the stock price, and it's down 2.5%, and I went, okay, yeah. Fun fact, they make more units per day. And they're like there was a special report on Bloomberg you can get on Bloomberg podcast, which was actually, I recommend someone go and have a look at. She emptied a handful of what looked like half peppercorns onto a table, and it was like 100 microchips. Like they were. It was like when you break off a lead pencil. Like, I mean, you wouldn't know what that is, Finn, but I know you went to a Steiner school. You definitely know what that is.
No, I don't. We're only allowed to use coloured pencils, Mark.
Yeah. Well, okay, so if you snapped off a coloured pencil, but but yeah, basically, like how tiny they were, but they make more units per day than all the factories in the world combined. Because they're just like these tiny little things. They're just pumping them out, and they're in everything we're using. Everything that's on my desk, like apart from my water bottle's got a TSMC chip in it, probably. And they are. I did have a laugh, and Finn and I were discussing this. India decided to go into, maybe some chip manufacturing or fab, and I'm like, and we were chatting in the morning. His first take up, and I said, pretty sure the Indians aren't that great at precision. And so I asked Grok, would you manufacture a high grade computer chip in India? And its response was, hell no, I wouldn't trust them with t-shirts. So but apparently they're pumping 20 billion into it, and supposedly they make a lot of generic medicines, and it went on to say that they have a horrific failure rate of not having any drugs in them at all, or having loads of contaminants. Is quite often half of what they manufacture they either throw out or ship and then get pulled up by the FDA. So I don't think I'll be buying.
I don't think chips is something where you can just you can compromise on quality, right? Or even any, because it's like, well, if it doesn't work, it doesn't work.
There's not a lot of margin for error with a chip.
Yes, so. But I just loved Grok's honesty. It's like, hell no, I would barely manufacture t-shirts there. And it went on to give me a little paragraph on how their t-shirt manufacturing is pretty crappy too. So it really went the extra mile. So Netflix wasn't too bad in terms of but they basically every single earnings for the last like 4 or 5 earnings in the row, they're removing visibility around certain numbers, and they're not actually they're deciding not to report them anymore. And everyone's now super suspicious that basically they've become, because apparently there's over 1 billion accounts or something stupid.
So 300 million users worldwide.
Yeah, okay. And then, well, now they must be counting multiple screens or whatever. And basically they're saying that growth's going to be extraordinarily difficult from this point onwards, and they've effectively become a major global cable company in a way, and they can't get the growth anymore. So yeah, they got belted. They got the last time I checked, they were down it was after the close today. They were down 8.5. I'm not sure what happened down 9% in the aftermarket. And I think that's kind of like they're down in the last 3 months. They're down 23%. They're down 42% for the year, as in the last 12 months. And you were saying the other day, Kai, it's a little bit too eclectic, the content now, because I'll go on there and I might like something, and they had that movie War Machine, which did very well, which was full on, like seriously full on action movie. And then they've got really romantic, so basically, it's great if you've got like a family of mixed ages and mixed sex in the house, but like it's trying to be a little bit everything to everyone, I think. And then they've missed out on the sports and shit.
Yeah, I think it's just the lack of original content. Because you think about back to the early days of Netflix, they had a lot of good content, and like Netflix sponsored series. Like Black Mirrors was one which I really liked early on. Black Mirrors, or Squid Game, whatever. There was a lot of popular series on there. But the issue is, it's just like you go on these days. I don't know, maybe because we're in Australia. I'm sure the US Netflix is a lot better. that's another factor to take into account.
But they had like 5 of the top 7 things that have come out in the last 6 months. But one of them, like the genres were just so ridiculously niche that like I watched one, and then my wife watched one, and then one of my kids watched the K-pop Demon Hunters. But like, you know, it's kind of that. Then there was nothing else. I mean, you're not really.
I'm completely clueless on this topic because I just pirate my movies. Theoretically,
you could definitely do that.
TV shows.
But you know, please download responsibly. And but yeah, look, I mean, I've got a big family, as everyone knows. But I mean, so Prime's really good because you can add on other services like Apple and Paramount and stuff, and it cheapens it. Netflix is the only one you can't get. But yeah, I mean, we've got to keep Disney because I've got an 11-year-old, and I'd be shot if we didn't do that. And then the K-pop Demon Hunters, I'd be shot if that one. I mean, I'd have to watch it at least. But yeah, I mean, look, it's just getting harder and harder for them just to grow exponentially at the end of the day. And when you're not being transparent, it's not particularly good.
Well, they are trying to tackle gaming, right? So basically, their pivot is towards gaming. But I don't know. I just don't think it's the right thing for Netflix to do because it's not the right platform, right? Like if you think about gaming, you know, you got the consoles, PS, you know, Sony PS, or you know, whatever, right? Consoles, and that might even be 290s, right? Like I think kids these days not many. I don't know. You know, the computers obviously.
What they're doing is your phone connects and it's your controller, so you can do a driving game.
Oh gosh, yeah.
And your phone actually becomes the controller, because phones are pretty powerful now. And I thought that was a pretty cool idea. But apparently no one else did, and I've never played one. But yeah, and they shove it in your face.
It seems like casual gaming is kind of on the way down. I mean, we're all waiting for GTA 6, which I think could potentially peak that up again. But you know, most gaming is online these days, and it's quite competitive. And if you're relying on a cloud server, there's going to be a pretty significant delay, and you're going to be, you know, getting the short end of the stick if you're going against people that you know, cloud servers. So it becomes difficult. You know, maybe if they had a partnership with GTA 6, that might change the story. But there's just not a lot of casual gaming happening anymore, and there's not a lot of new IP in the gaming industry. So I think that's going to pretty heavily affect their ability to take on that market. But yeah, we'll see.
Yeah, I mean, anyway, well, my boys don't really. They play a little bit of PlayStation, but it's kind of not like it used to be.
No,
so we've got Alphabet and Tesla next week is 2 of the big ones. And for anyone who listens to the morning call, like obviously I'm living this and watching this every morning. So, but the CapEx is the thing. Basically, I don't know if anyone actually cares about EPS and revenue growth. But because I think that the memory and the chip stocks rallying as much as they have in the first 6 months, and they report late, so they've only just reported 2 or 3 weeks ago. The guys that are paying, and it won't be Elon, he'll be fine. But Tesla doesn't tend to move unless there's a product release, so that's not really a big deal. But if Alphabet's, they've had a 2 to 3 month delay on their Pro platform for enterprise, which is obviously where everyone's decided the money is. So they were down 5% overnight. If their CapEx is out of control, I mean, they'll probably be the best ones, right, Kai? Because they make a lot of their own stuff and they do inference. Yeah. So, and Tesla as well, really. So they're probably out of the big boys, the hyperscalers. Those 2 are probably the best at engineering, right?
Well, Meta's, or wasn't it? I mean, Meta's, weren't they looking to get into their own hardware? I know, like, in terms of their hardware stack, it's pretty impressive, right? Because everything is customized. You imagine the amount of media they have to serve, whether it's on Instagram, Facebook, or whatever platform. You know, all these big tech require substantial amounts of hardware to serve these multimedia, formats across their whole entire platform, right? If you think about like how many people on Instagram or Facebook, it's like billions, So, it's they certainly have a very good control over their hardware level, and again, in the AI age, it serves their purpose because they already have a lot of the specialists and skills, and they're just going one layer deeper. Well, for Meta in this case, and I think that's why they've been on a bit of a rise this week.
Well, they said they were going to start renting out their compute.
And
Zuck essentially said that they need compute to continue their AI ambitions. He said, however, the amount of money we've been offered to rent it out, which kind of makes me kind of think that, I don't know, that was just like he just decided to make these comments. Like, it wasn't an interview or anything. It's kind of felt a little bit contrived, like as in like, I just got a feeling that there's a bad CapEx number coming from them because he's kind of laying the groundwork for an excuse for it. And I would imagine, and he's always been the worst at budgeting. Like apart like Sam Altman now holds the crown because I've never seen someone so smart, so bad at maths in my entire life. I'm sure his CFO is pulling her hair out, because she made public comments that they have to exponentially grow, otherwise they're cooked in 2 years. That's not good comments coming out from his CFO. But Zuck's always like they're called Meta. The bloody virtual reality thing nearly cooked them, and they sunk billions into that, and then like they've done the opposite to Apple basically. Apple up misses. Yeah, I mean, I suppose when you invent social media, I guess you can afford to have those misses. But I think the Apple Vision goggles are now. I mean, they were $3,000 on launch. I think they've upped the price on a bunch of other stuff at Apple this week, including the software. So all of the software is all going up by small amounts, which is why they kind of rallied this week. But yeah, the Apple Vision goggles must be like 10 grand now. Like I don't think there's about 5 people in the world have bought them. They look pretty cool in the video, but not for 10 grand, not for 5 grand or whatever they are.
Bit of a sore neck as well. I mean, it weighs like 2 kilos or something ridiculous. I mean,
does it?
That's an exaggeration. Don't quote me on that, but I've heard that it's very, very heavy. Not very feasible. Look, I won't be surprised if they bring out a lighter model, but at this rate, there's just not much out there. Once you're in the world, there's not a lot going on.
No, it's kind of like an immersive TV watching experience. It's not really it's not for outdoors.
It sounds like a sore neck and a headache to me.
Yeah, they are going into the luxury, creepy smart glasses market.
Yes.
So apparently they're going to do. They've got to try and get a deal over the line with a fashion brand or something. I think Zuckerberg's got like that Lux Toxica, the people that make Ray-Bans and all that sort of stuff.
Right.
They reckon that's the new thing because Apple Watches did make them a lot of money. RTX will be interesting. Intel will be interesting. Eli Lilly will be interesting. So that'll be Friday morning. Verizon won't be. GE Vernova. It's one of the ones we liked last time. I think it was one of your favorites, Finn, was it not? And it did quite well. I did like them. IBM's clearly not supposed to be there because they got belted on their earnings. And for the smokers, Philip Morris will be out on Wednesday night as well. So apparently they still sell a lot of smokes in China. What does Honeywell make, Kai?
Engines. Sorry, I should be more specific. So Honeywell owns a part of Pratt Whitney. Pratt Whitney builds the F-22 engines. Fighter jets.
Are you talking about RTX or Honeywell?
Maybe I got them mixed up.
We'll have to fact check that one.
Yeah,
anyway, moving on. Now that we're a bit confused, and then we're going to have obviously Apple and Amazon later in the So the Wednesday, Thursday is going to next week's going to be when we get a bunch, and then we're going to start getting Aussie earnings.
Sorry, RTX.
We've got Newmont, which is technically US listed, and then we've got Fortescue towards the end of the month, and it's one of the first. So yeah, and the banks shot it out of the park to the point where even Jamie Dimon said we shouldn't have made this much money. Apparently, trading and M&A and stuff's just going ballistic, and he reckons that he basically called the top of the market on his own industry, but he does have a habit of that. And yeah, I don't think we need to talk about Colgate Palmolive. I think we can probably move on. So what we're looking at, so we obviously a couple of earnings season ago, we made good money out of Nvidia, the likes of Nvidia and the likes of Meta and things. Recently, we've made pretty good money out of AMD, Micron, etc. And I've added a little layer here for data center or compute as a service. So that's, they're the guys that make the stuff for the data center. But Iron, which is actually an Australian company that is listed in the US, they did Bitcoin mining infrastructure. And then AI came along and they went, these guys pay heaps more. So they've switched their business model completely. But they cannot, Bitcoin comes back. They can always fall back on their Bitcoin. But they're streets ahead in terms of, because it is technically the same infrastructure, right? Well, I can ask either of you, really. I don't know.
It's very similar. Yeah, it is very similar. So you can, it's quite interoperable from what I understand. What's your take, Kai?
Yeah, sorry. No, I was sorry. I was just that Honeywell thing got me. No, sorry. RTX. Pratt Whitney is part of RTX. Honeywell is a generic industrial. Yeah. So they do have an aerospace. But they do have an aerospace segment, and that's why I was getting confused. I was like, oh, I'm sure I read somewhere they made like engines or but yes, they do actually make engines, but it's not Pratt Whitney. Sorry.
To be honest, I thought they made like air conditioners, but anyway, so I was off. But come on, the data center as a service thing. So the Bitcoin mining versus they're pretty GPU heavy, right?
Yeah, exactly. I mean, look at them at the moment. Obviously, traditional data centers. It's well been about building more server racks on top and all this stuff. But really, at the moment, that GPU demand for compute is very underserviced, right? And it's obviously very expensive. So whoever can solve that problem. I mean, and that's why Nvidia has such a dominance in this arena, right? So from all the networking's done on CUDA, so everything's built around Nvidia and NVIDIA chips, and that's why they are the dominant player. But in terms of compute, they need a lot more GPUs to service the demand, I think.
But Iron has them. Well, we're gonna talk about obviously we're gonna capitalize on Kai's critically acclaimed appearance on the call yesterday. But that was kind of one of my picks, is that these guys, like Iron's been buying Nvidia's top of the line stuff before AI was a thing, and they've got seriously decent both compute and power booked out. Like they've got a massive thing in South Australia and as well. And I just quite like the fact that they've been doing it for longer than everyone else. Whereas CoreWeave and Nebius or Equinix is just data centers. They're like
right? Exactly. Equinix is that you're buying rack space in data centers, so they have a ton of data centers all around the US and globally, even
Australia. I think
a
lot of the trading stuff is over in Redfern, isn't it?
There's Olympic Park out west. They're building out the new data centers out west. There's some in Tarman, but that's next DC. Sorry, but they've got a ton.
Which actually, I've got a little bugbear with the Artarmon next DC center. So they're bitching about power all the time, and you go past that thing, and it is just this wall of light Like
it is. It's right outside my place.
Oh, really? Like, mate, how do you sleep? It's like Kramer when they the old Seinfeld episode where he's like, the Reds get it.
Oh,
like,
mate,
and I'm like,
you're
bitching about your power bill, and you're like, what the hell? Like,
you know what? Like, you can see this thing in the middle of the night, and it's just glowing,
just beaming, and it's like, it's and like the residents are complaining, and everyone's complaining their things, and it's like a big like middle finger to the, it's like we're burning so much power, it doesn't matter that we could. It feels like daylight in the street just below us, like it's in the middle of the night.
Well, interesting story as to why they chose that location around the Tarman, right? Because we visited the ALC a couple of times before, and they, the Australian Stock Exchange, right? So they have a data center right next DC.
Hey,
so
Kai, I'm just gonna stop you for a sec, mate. As head of the Australian Securities Traders Association, was one of the ASX's first guests to tour that facility.
Yes.
Didn't know what I was looking at, but all I remember was it was really loud in the diesel generator.
The diesel generator.
What was it? Had to put earmuffs on, otherwise you blow your eardrums. Anyway,
a fun fact, it was like, what was it like? The diesel engine has like a week of redundancy. So like the guy was explaining it, right, and it was super interesting. It was like, so if someone was to bomb the ALC, like, would it remain intact and blah blah blah, all this stuff, right? So the security around it and all this stuff, redundancy, because this is what really that's the job of data center, right? It's like you're putting in there so that your servers run 24/7 nonstop. Right. And there's so many like interesting layers of contingencies. Like if there was a fire, they've got, I think it was like argon gas or something like that. Right. So it doesn't damage the computer, but it sucks the oxygen out of the air. So you can put out fire.
Also
super
not
cool.
very good to be in that room.
No, definitely not.
Because, it's like, the fire's out. Can't breathe. No,
definitely. Sorry, but going back to the point, it was like why they chose that location is because the Ausgrid is right next to it, and this grid serves the hospitals, so the Royal North Shore Hospital, right? So, and this is exactly why. And so they go, if there was a power outage, they would be
the first thing that goes back on.
That's it. That was the whole thesis around why this data center.
That's pretty smart. It's pretty smart.
Yeah.
I mean, my major point was that like they really feel like they're flaunting how much electricity they don't give a shit about electricity.
Oh yeah.
And how much because it's just like it's like it makes Las Vegas look tame when you go past. So and I drove past the other morning and when it was still 6 o'clock when I had an early start and it, like coming down the hill and it was a bit foggy and you just saw this. It was like I was driving to the gates of hell because there's this massive red glow.
Yeah.
But we have digressed like quite a lot actually. But now Finn, you've got to. So we all came up with like some buy the dips, awesome stuff, ones we like. I think we do. We have general consensus, boys, that we're kind of liking this cloud layer and this data center or computers as service layer. If the hyperscalers don't bugger up earnings season by spending way too much money. I mean, but that's probably going to be spent with them. But I
really like DigitalOcean. I really like Cloudflare. I mean, every man and their dog has their own app these days, and so they're effectively capitalizing pretty well on that market. It's so easy to put something to market these days, and the first kind of or one of the first people you end up paying, aside from obviously the AI creators like Claude, etc., is DigitalOcean and Cloudflare, because you need the infrastructure to actually put the app out there. So I like that as a kind of pick and shovel play on the AI kind of narrative. And DigitalOcean and Cloudflare are pretty direct hits.
Well, Cloudflare is like aren't they the international AI freeway or some? They.
It's Cloudflare is like this is getting a little bit technical, but it's called the DNS, so it's dynamic name servers, right? So every time Okay, so this is how the internet, the whole. This is going to be a bit of a tangent, but
I don't know whether
anyway.
we've got time for. This is how the internet works.
This is how but I'm going to go into it anyways.
That was a boy.
No, and look,
but-
and
Yeah.
look, we could host that webinar later.
I'll keep it really short, but essentially,
All right, you've got 30 seconds.
30 seconds. I can do it in 30 seconds. But essentially, whenever you look for a website, right? So you go mpcmarkets.com.au, right? It has to find it somewhere. So it's called a DNS. So you have these dynamic name servers, and this is what it's routing, right? So basically, Cloudflare is a router across the web to all the destination. It goes into the PC, goes to the servers, all this stuff. So basically, they're distributing the name addresses. Station. Yeah, exactly right. So it routes all the links. But they're moving obviously more into like hosting their own things and servers. They got a ton of compute as well, right? So, but yeah, they're the distribution of the name servers. So that's
All right. Well, look, I mean, let's get to more there's a few that we really like that we want to buy. Well, let's start with Chevron, which is a boring one, which is one I want to buy. It's not a buy the dip stock. It's a buy right now. Because I'm going to give you 3 reasons, and I'm going to do this really quickly so people don't. Normally we're around about 40 minutes. I think we're 36 minutes already. So U.S. oil reserves are at a 40-year low, lowest since the late 70s, I believe, or early 80s. That's what's I think artificially keeping the oil price down. Trump's getting them to basically release. They are releasing reserves, and then the reserves have to be paid back by the producers or whatever. But if you run out, you run out, right? Hormuz is shut again. It's day 5 of more strikes. It's an absolute disaster, and we're back up to escalation levels, which we haven't seen since the first 30 days of the war. And now they're getting the Houthis involved, which is, and I'm not going to try and pronounce it, but it's the Red Sea Strait, which has got the Suez Canal at the end of it, where the Saudis pump across. They pumped across Saudi Arabia to get things out that way to solve this Hormuz thing. But the Houthis control that little bottleneck there as well, and they're mates with the Iranians. And I think we have covered this in a previous thing. We've covered a lot of weird ground this year, like, mine-sweeping boats and God knows what. But it really does seem. And what we basically realised is that Trump could only go to war for 60 days, and the MOU was really only about him having to restart the clock because Congress was never going to pass the war. So the Iranians last night hilariously asked for, they wanted a cut of Trump's trading profits, which they calculated to be 4.5 billion of him saying things to manipulate the oil price and then making money and all this sort of stuff. So it seems like and I don't think Trump cares about the midterms anymore. I think he's just done. So because Finn, you were saying JD Vance is being like,
he's on Rogan. He's doing the rounds. He wants in.
Mate, he just needs to distance himself.
So
yeah. Well, the poor guy, he agreed to be vice president on a platform of not getting involved in other people's crap, and that's all Trump's done. He's like, and then we'll go back to Greenland soon. Chevron, love it. By ConocoPhillips. What was the ETF you liked as well, Finn?
Yeah, I like the Vanguard Energy ETF. I think it's what's it called? VDE. So it's got Exxon, Chevron, and ConocoPhillips as a top 3, and then a bunch of other really good oil names as well. So if you wanted to be a bit more diversified, it's actually not a bad pick.
Yeah, and Marathon Petroleum in the States as well is the biggest refiner. Refining margins are at record highs by 20%. They're making $60 a barrel, which normally, I think the previous record high prior to this was like 40. And then, add on top of that, there was another reason that I added on top of that. But I mean, look, I just think oil is basically going to go back through record highs. The US is just not. They think it's over. And I think they're about to get a very rude shock. The only thing keeping oil down here at the moment is China has stopped importing, and they're going to run out of reserves at some stage as well. So, and then Finn, one of your picks you'd love to buy in the dip was Coinbase.
Yeah, look, I don't mind Coinbase. I think they're a good business. They're probably the most trusted cryptocurrency brand that exists. Look, obviously, this is more of a long-term play. I don't think crypto is necessarily going to turn around tomorrow. I think we've probably got a few years. But if you're like me and you have many years ahead to wait and be in the market, then I think it's a pretty good play. They're also divesting from crypto alone. They're going into prediction markets, which is obviously a massive market in the US.
Prediction markets are huge.
Yeah, at some point it's going to hit Australia. It's going to be pretty big. But they're expanding internationally as well.
Well, you know what it might come in as in Australia? And I was joking with a friend of mine the other day. It's classified as gambling, and we're so super happy to take. So it may not come in. Prediction markets may come in under a gambling license, not an AFSL.
Yeah, well, you got to compete up against the current kind of gambling mafia here in Australia, which is pretty hard to get into. But maybe if it just gets adopted by the current gambling mafia, then it'll be adopted. We'll see if they're as technology focused as you think.
I'm gonna go with you.
Yeah, we'll see.
But maybe we'll be sitting around instead of backing a greyhound. We'll be sitting around going, come on, lose that election, or be sunny. Like
it's already happening in the US. It's already completely happening in the US. Yeah, I mean, this is where it's heading.
They haven't had sports betting.
Yeah, well now they do their sports betting through prediction markets, so it's kind of done a little bit of regulatory arbitrage, which has I think that's a lot of where their growth has come from. So
80% of prediction markets is
exactly
sports predictions.
Yes.
So yeah, I don't look. Obviously, this slide's not particularly relevant. And I will do a quick run through before we go with Kai. And I think we're gonna have to, because you explained what the internet is, you're gonna have to stick to one stock, mate. But I'm gonna do a quick. So gold, silver. This actually, you know what? I'm gonna skip that because it's the wrong chart. So yeah, tell us about your tell us about. I'm gonna pick out ANET.
ANET. Oh my god. Yeah. Okay. So explain it fast. Look, with Arista, right? Like it's really interesting. So like obviously my background is in high frequency trading, right? So basically it's the way I like to put it is it's switches are like the plumbing of the entire data center. So like, anything that you need to have a server and basically connect to something, it needs switches because it needs to communicate in between each other, right? So obviously Arista, there's three big players in that space. So you got Arista, Cisco, and HPE, so HP Enterprise, and they've acquired Juniper, right? So I've personally dealt with most of these switches before. HPE, it's not doing good. Juniper's not doing great. Like it's not good. Cisco is obviously competitive, but it's a very different model, right? Because like if you're talking about low latency networks, which is what these GPUs need, right? So like you think about the massive amounts of data that's going through, with this AI processing, you get the results from the large language models. It has to go out, blah, 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 blah. Like incredible amounts of networking. And if you actually think of it from a plumbing angle, think how much of the pipe is flooded, right? So, and it needs to communicate very quickly to get it out to the rest of the world, wherever it's the end user is.
And the quicker it can go out and back, obviously, the quicker the whole thing works, right?
Oh, well, yeah.
And there's a lot of out and back, isn't there, generally with AI? Like,
absolutely. Absolutely. Like it's not even just the AI component, but everything else. You think about just the messaging on the network, it is flooded, right? So you need high capacity switches to route these messages throughout the whole entire network of the world, right? So Arista, obviously, they're very good. They are the leading players. Cisco's, they obviously have comparable products as well. But if you think about it this way, where Cisco is like the Apple ecosystem and Arista is like the Google, or a little bit not Microsoft, like more like Google, where it's more open protocols. So you're not tied into the ecosystem. And it's a big thing because, like, let me tell you the experience with Cisco switches. It's like, okay, so you buy this switch for a couple $1,000. So you paid, a couple $1,000 for this switch, and they're going to charge you a couple $1,000 more every single year to use their software. If you don't use their software, they brick your hardware. So basically, you can't use the switch, which you paid $5, $6, or whatever, even high-end switches like $20,000, $30,000 or more, right? Unless you use their software, they're going to brick your software. Obviously, your hardware, right? So it's crazy. But that's why
essentially you can't do without them.
No, you can't.
I mean, you can buy all the best hardware in the world, but if your switches are crap.
No, like if you buy the hardware, no, it's like the licensing, right? So basically, you buy this Cisco switch. If you don't buy their licensing, they're saying you can't use this switch.
Oh wow!
Yeah,
that seems a bit
crazy, right? so that's, but obviously their software is good. But regardless, Arista is a more open source model where the protocols that they use it's not tied into that system. So that's why you have all these bigger players use them, right? Like Google, Microsoft, whatever, endless large companies, they use Arista switches because it's more open. And that's why Cisco, in a sense, is not as growing as much as Arista. They're still growing. Obviously, there's still a space for it. But yeah, it's just, but you need it in this day and age of a cloud, of data centers, of AI. It's the pipe, plumbing and pipe, right? So
plumbing was the thing that has the greatest effect on the mortality rate of human beings. So maybe look, I'm drawing a long bow there. I'm going to stop with that analogy. Now, fear and greed, 42 this week, slightly back into fear, but not by much. Just a quick check, and it's about 4:45 here. It's dinner time. We're still down 1.5% in the Nasdaq. So still looking a little bit grim. VIX is heading a fair bit higher, actually, bordering on nearly 19, and I would imagine that it would have been a pretty grim close, because I can't see anyone wanting to take a position into the weekend with there a lot of chest beating, and to be honest, if you're not long oil, you don't like money. Like it really feels like, and JT, poor bugger, was wrong again, and he literally just put in bull bear, bull bear, bull bear before he left. But I'm starting to feel a little bit bad for him until I look at my own score, and then I don't feel so bad. So we were both right last week, Kai. And what are you this week?
I'm going to be bear still. Bear.
Thank God, because I predicted that. We're all bears this week. So I just assumed. And then Finn, you
bear.
What are you thinking?
I'm bear this week.
You're a bear as well?
I'm a bear as well. Yep.
Yeah. That concerns me. It never. I mean, mind you,
are you counter trading me, Mark?
No. Just when all of us are, and you're like now a fourth.
So this is where the prediction markets will come in handy, right?
Well, you could just
put money on it.
But they're 24 hours. But as well, so you could probably hedge on weekends. But I've accidentally left in the hyper bear. I'm not hyper bearish, but I think there's a hell of a lot of risk out there at the moment. For those of you who and I've accidentally not put in the slide for it, but obviously we've got Buy the Dip. Go and check it out at the website. It's on the front homepage. Just go to the homepage, nbcmarkets.com.au. Kai's told you exactly how it all gets there today. And so you can think about what he said as you type in our website address to get to Buy the Dip. And what else was I going to say? And I wrote all the reasons we're bearish. So Kai and I were exhausted last week, and it was possibly the worst podcast ever. Like, we're just eyeballs hanging out of our head. We got blokes in Japan, we got blokes swimming with whales, and then all of a sudden we had about 5 projects lob in our lap. So we really ham-fistedly told, I told the story of why we were bearish. So I've actually written an article which makes it's much more succinct and makes a lot more sense than possibly the garbage that we were talking last week. So go and check that out at livewiremarkets.com. And you just search my name, and and it's sort of the risks that no one's saying, and the complacency, which is never a good combination. And next week we'll have the debut of our new head of what are we going to make him head of? Head of US equities and analysis or something or other. We've got Phil Delocri joining us, who's joining the team here at MPC. Very experienced trader, and he actually brings the age up a little bit with us. But he's been a professional trader for a good part of it'd be over a quarter of a century, and trades a lot of US stocks and things. So we'll have to be on our game, and he's full of good chat generally. So we'll be a good addition to the team and get us a little bit more stock focus. So we're welcoming him next week. But boys, Finn, welcome back.
Thanks a lot.
You've been very chillaxed this week. It's been unnerving. I just, a little bit of, we've been a little bit stressed, but it's been good to have you back. Kai, thank you very much, mate. Well done on the call this week.
Thank you.
And thanks for relegating me to the ASX zone. I hate you so much right now. And thanks for listening, everyone. We will talk again next week.
Thank you.